Also, if you're talking like real institutional money, like pensions, these are tax exempt investors, so they don't need the tax benefits associated with multifamily investing or commercial real estate investing, right? So they're comparing straight pre-tax return on
Yield.
short-term bonds versus pre-tax return on commercial real estate. So it's been a really tough environment. So yeah, I get it. I think it's like a little short-sighted because short-term yields are not here to stay, right? The Fed already cut 50 basis points. Fed's going to probably cut 25 basis points in November and then cut again in December. Let's just ignore the 250K job report that just came out. But short rates are not here to stay. So people are going to be searching for yield one way or another. And that's kind of one of the big things that happens when the Fed cuts rates is it forces people further out on the risk curve. And they're going to take more risk by way of longer term maturities for bonds, or they're going to take risk as far as credit, right? Instead of buying government bonds, they buy investment grade. Instead of buying investment grade, they buy junk, or talking about going into privates, the whole spectrum of risk, right? So that's going to spur more investment. And also, people have been sitting on their hands for too long, right? People want to invest. One of my favorite quotes, actually, that Peter Linneman says a lot, and I'm assuming you already listened to the new Willie Walker Linneman video, but he talks about how institutional groups are paid to take risk, right? They're just not paid to take risk when other people aren't taking risk, right? And that's the period that we've been in. We've been in this period where, like, yes, all these groups are sitting on billions and billions of dollars and they're paid to go take risk with that money and go invest it, but they're not paid to take risk when everyone else isn't. So we're going to finally get past that point and it's going to be like all or nothing. Like right now it's nothing, and then it's going to all come back and everyone's going to be investing again, and all at the same time. And that's why Peter Linneman, in that Willie Walker webcast, that alliteration is crazy, he thinks that cap rates are basically going to compress like 75 basis points over the next year.